another episode of Elevating Property Management. I'm Colin Douthit, and today I am getting to chat with Josh Eitingon. Josh, thank you so much for being here.
Thanks for having me. It's great to be here.
Yes, so as we discussed briefly, our whole goal with this podcast is to bring value to owners, to investors, and to the property management industry as a whole. Because we want to elevate the industry, we want to be more professional, and we want to learn where we can be better and serve investors better. So that's kind of what we're hoping to discuss today. And you are a great person to have on because of your experience in investment, in operations, and acquisitions. So can you give us a little bit of a rundown on your history with real estate and kind of where you are at today?
Sure, I'd be happy to. Before even jumping in there, I'm excited to be here, especially because of the topic itself. I think property management's one of those things that is easy to take for granted, and then it's probably the most important piece to the formula to ensuring success. So I'm excited to dig in a bit. But a little bit about me. I'm the co-founder of DXE Properties. We're a real estate investment company. We're located in New York. Predominantly what we own is multifamily in the Southeast, 70s, 80s, even some newer product across basically 3 states and 7 different cities, North Carolina, South Carolina, and Georgia. And we're a group that's not huge. We look to do 2 to 3 good deals every year, stack them on top of each other and continue building. My background is in acquisitions. So I worked as an analyst and an acquisitions guy for a real estate investment group that did much of the same of what we do. After 4 or 5 years with them, peeled off, started DXE, brought on my partner who has more of a called institutional development and construction management background. And we paired together to take on larger deals across the Southeast. We always use third-party management in each of the deals that we do own. I'd say that at least currently, there were 2 that we managed on our own, and we're not actively looking to do that anymore.
Yeah, I can understand that.
So we've probably acquired around $70 million worth of real estate at this point in the 4 years that we've been working together and active. But we really try to stay relatively centralized, build some scale, and the size of the deals are getting larger. I think now we wouldn't take on anything less than about a $10 million project. However, we do have a bunch of legacy deals that were $2-3 million acquisitions, and they're just 30, 40 units. So we have some experience, I'll call it asset managing, at some of those smaller deals, and then also the larger ones that are fully staffed.
Okay, great. No, that's awesome. So definitely have a lot of experience here to talk about property managers because you're probably dealing with a lot of different property managers. You said 7 different cities. So is that fair to assume you got 7 different firms that you're dealing with?
No, it's not. So city, but we have 3 different management companies across each of our deals. 4 different management companies across each of our deals.
Okay, gotcha.
So part of it is, I think if we could snap our fingers, there's the larger, probably most professional firm of the bunch that we would put all under. But the reality is they have no interest in taking on some of our smaller legacy deals. So we had to chop them up by market, basically.
Yeah, and I mean, each state's got its different requirements, and from a PM operational standpoint, as we look at possibly expanding beyond Kansas City, just logistically, it's a lot of work to try to manage, the team and then have them manage the property and everything remotely, even though you've got a lot of systems that are all digital now, but it's still something for them to have to take on that kind of expansion.
Exactly. I mean, I don't know, we were talking about it before we started, but you guys obviously have a portfolio ranging from, I think you said even single family, all the way up to 100 and hundreds of units. I don't know how you could possibly start that in a different market without any real scale behind you. Just, putting together the teams, vendors, everything.
Yeah.
So I think when a manager, especially that covers that call it sub 100 unit range, is able to do it well in one market, I think that's like an irreplaceable value offering that is tough to compete with.
Yeah, no, it's been interesting as we've grown. The PM firms that we see more of has changed as we look at bigger deals, and even as we continue to look at a 16 unit deal or a 30 unit deal, we definitely see different PM firms in different ranges. And one of the ways that we've been able to still handle that is by assigning certain property managers to either certain asset classes, certain geographical areas, just so that they're more familiar with whatever asset class that they're currently in.
Mm.
Um, we don't have somebody that's managing quite a few single families and some smaller fourplexes. We don't have them on, a 50 or 70 unit complex as well. So,
Got it.
kind of allowing them to understand the mechanics and, the different owner relationships and kind of give them a sweet spot. We've got two PMs that they just handle voucher properties.
Mhm.
That's all that they do, right? Because it's such a niche thing. So kind of building out the niches within the company has been interesting to allow us to handle these different ranges, different markets.
Well, that makes sense. Let me ask you this, although I know you're supposed to be interviewing me.
I'll go for it.
I mean, what's something that you guys, obviously you work with a number of different owners. I'm sure like the 80-20 rule exists for you guys, where maybe you're doing 80% of your work for 20% of your clients, and
Mhm.
what maybe, what are you really looking for in an owner? Especially, it might be a smaller owner that you're not making that much on. What are some I imagine you're probably more define the owners that you're taking on, because you have all sorts of efficiencies that you need to keep to just operate at the end of the day.
Yeah, I mean, the trust, right? Giving us the ability to quickly earn trust is kind of what we're looking for. Because if we're dealing with the person that owns two single family homes that wants to talk on the phone with a PM for 30 minutes every week, I completely appreciate where they're coming from as an investor. However, that's not an effective use of my property manager's time, right? As far as the income generating activities. Now, if we're working with a syndicator that we have a couple hundred units with across a few different portfolios or a few different properties, and they want to spend 30 minutes to an hour once a week, that's a completely different scale. And, we could appreciate that. So, what we really want is to be able to build the trust with our owners and have them not micromanage us, because, you don't micromanage your accountant and they're dealing with your money, right? And we don't want to be micromanaged because we've got plenty to deal with managing two customer bases, which are owners and tenants. And so, the ability to earn your trust so that we can do what we need to do, and try to make you as much money as possible. So,
That makes total sense. I think it's frankly, it's one of the reasons that it's pushed us to have to do larger. Any of the projects we're taking on are often pretty significant, capital intensive, either turnaround or improvement plan project. And, we have to be all over it. And we insist that we're a part of like the construction
yeah,
management and all of that. And it's just not going to make sense for us to pay you X fee and do all of this work and headache, with us and around us for a 4 unit property.
hmm
So
yeah,
it's been interesting, and I've maybe in part had to learn that in some ways the hard way, but
yeah,
uh, it's a truth behind it, that there's time in every element here.
yeah. And we understand that that's something that's going to take time to earn that trust. And we have, out of almost all of our investors are out of state. One in particular, he owns 16 units here, and we were pretty involved for a little bit, and now it's, hey, this unit's vacant. Here's the scope to get it up to where all the other ones are, so we can increase your rent by $200 a month. And he just cuts us loose and says, "Send me pictures when it's done." And like
Yep.
that's a great relationship, and we've built that level of trust. So the ability to earn that trust, is something that's going to be really big for our owners. And just setting the expectation. What's your expectation of what your involvement's going to be?
Mhm.
My thought is, and this is not my original thought. I'm gonna steal this from another property manager that I heard, but was, you are paying a property manager to do everything that you don't want to do, so that your investing can be truly passive, to where you're not having to actively manage that. Now, you guys, being the syndicators, investors, investment group that you are, you're going to, need to be be more active because you obviously have a lot of other people's money that you're responsible for, and we completely appreciate that. But you know, that's kind of been my experience on that, right? And let us do what we do, right? You don't need to come in. We don't need to break down, you know, how we unplugged a toilet, right? The toilet got done. It was a maintenance invoice. Let's discuss the $20,000 unit rehab, not the $150 maintenance bill.
Totally agree.
Yeah.
Totally.
Yeah, absolutely. So, you know, as we try to make the property management an industry that's better, that's more professional, that, you know, has, you know, it's a job that people aren't ashamed to say, right? Because sometimes you get the sleazy property managers or the mom and pop operators, and they're still doing everything on paper. And we took over a property last year where the old property manager was advertising open houses in the newspaper. I didn't know that was still a marketing strategy, but that just shows my naivety there. So, you know,
along those lines, because I like to think we are somewhat savvy, being on the internet advertising marketing side. We're not in Kansas City, as you know. Where are you most effective? I mean, take maybe the Section 8 affordable out of the equation, but where do you find the most success on the marketing side?
for filling vacancies,
Yes.
Facebook.
Yeah. I know I feel the exact same way. I think paid Facebook, not even, I mean, both paid and unpaid, we've had a lot of success.
We've never paid for an ad on Facebook. So this is the thing where, you know, as I continue to delegate, that I need to get somebody else to push off on. But I can't ask anybody this at this point. But essentially, I, under my personal account, because I can join as a person, I can post on Marketplace for free. And I can also post on, you know, the local swap shops, right? The Kansas City swap shop, the Kansas City moving, looking for rent shops, the Lawrence, Kansas. And when I create the posting, I can then target it to where it goes into each of those groups that it makes the most sense, as well as it's on the general marketplace. And, you know, I have kind of the same message that I just copy paste over and over again, you know, once a day, just sit down on the phone, 5 minutes and copy paste all these responses. So,
you know, one thing that we do along those lines, because, right, you have to post it from an individual. We actually created accounts for our properties, and then we would allow whoever that property manager is to log in for that account, jump between different properties, and it at least takes it off of me, at least, to do that work.
I've been toying with the idea of putting together an Atlas Facebook account that's a person, not a business,
Right.
so that they can make those postings, and I can pass that on to somebody else. That as I continue to delegate, that's where we need to be. So for making property management better, let's you know, there's pluses and minuses that you've experienced. This made a terrible one. This made a good one. What has been some of the experiences where you've been like, this property manager is not good, right? Or what have they done that made you think they could do this better? What were some weak spots or some instances where you've run across that?
Yeah, I mean, one of them is we have a property. It's really an excellent location. It's like right in the heart of Charlotte. Like you could walk to where the Panthers play. You could walk to like all major employers. Awesome location. It's rents are like, I don't know, $1,400 or so. So it's not huge. It's only 30 units, but love its location. We took on a manager that they're pretty modern in everything that they're doing. They manage a whole range of properties, some of which are pretty large, like 200 units plus.
Mhm.
Yet they've put together a portfolio of some 20 to 80 unit properties. So our hope was that we could tack on well to their existing portfolio and just run very, very efficiently. And we found out it took time. It took us working with them to identify that it just wasn't running efficiently. I think one of the things that stands out to me was like software costs, which all get passed back. It's relatively fixed per property. And for us across 30 units, it's very difficult to stomach the $500 a month that we're being charged versus the property that's 200 units for that same software cost charge. So some of those things, like even payroll, they had to apply payroll to this property, whereas other property managers would look to share that staff more efficiently. So I think that was a big piece of it. And we just weren't getting the attention, frankly, that some of their larger properties were from a leasing perspective as well.
Okay, no, I can truly appreciate that. One thing that we really focus on is trying to minimize the additional costs and fees and burden that gets passed on to our owners. Understanding that, I'm an investor before I started a property management company, so I understand how all the cash flow issues and struggles that you can run into there. But knowing that they don't, you don't want to get burdened out, you want to be competitive, and if we can, help you hit a better NOI, keep your bottom line tight, then you can refi and buy more and give us more properties to manage for you. So what have some of the better property managers that you've worked with, what are some things they've done that have differentiated themselves?
Simple things. I think you spoke to it already. I do think the trust is a big piece of it. Transparency is obviously the most important part of it. I mean, if you have one experience as an owner where you feel that you were taken advantage of or slighted in a less than transparent way, it's going to forever ruin that relationship with the property manager.
Mm,
Uh, so I think that's the key. I mean, obviously, leasing quick is great. Running expenses lean is all great. But if you're going to put, your finger on something, that's it. It's trust, and maybe responsiveness is
mm.
right after it.
Yeah. Yeah. No, communication's huge. If you're sitting out there and waiting for, a week for a response, then that's something that you need to, needs to be addressed internally.
It's definitely true, and it's tough. It's tough. I mean, property management, it really is thankless. Like if you do an excellent job, often that property is just being taken from you because it's sold and you've created all this value.
Yeah.
If you do a terrible job, you're getting fired. So,
You want to do, so what you're telling me is we need to do just good enough to make it not sell quickly, but not bad enough to get fired.
that didn't come from me, but I think obviously it's business plan driven, and many people are long term holders, and you're in it obviously for the relationships and many deals and doing it over and over again. But it's difficult, and I imagine it's difficult for you to build the right team that's going to always have that responsiveness and stay motivated
Mhm.
and and all of that to ensure that we're seeing success.
Yeah, it is. It's an interesting place. The having two customers thing, sometimes with opposing views, really kind of, you're in the middle of mommy and daddy type situation. But yeah, you do get pulled, and trying to balance, okay, what's right and legal for fair housing, and what's right and ethical for the owners to be effective stewards of their properties. That is, and it can be thankless, but at the end of the day, it's an industry where we started because we saw some opportunity for growth and an opportunity to perform, because generally we felt like, at least in Kansas City, the bar for a successful property management company was set very low, and we saw that as an easy hurdle or bar to step over, but then also to continue to grow past that, and bring that level of professionalism.
Makes sense.
Yeah, yeah. So trust. What's the best way that a PM can build trust, right? I mean, you said transparency. Can you dig into that a little bit more?
Perhaps it's driven by all of our deals and projects that we take on. We're doing weekly calls and plus interacting with our property manager throughout the week. But I think that trust is often driven by proactive nature of the property manager.
Okay.
We're getting on these calls. Are we driving every single question, and there's no issues or anything ever from the property manager to share with us, or is it the other way around and we're getting hit with 1, 2, 3, 4, 5, hey, this is what happened, this is where we stand, whether they need our input or not, we're at least um, you know hearing and responding that way, rather than needing to wait for the prior month statement where we're already 40 days behind on it happening, and me saying, oh, what was that $1,500
Mhm.
expense for plumbing or whatever it may be, where I just was uninformed. So I think those little things, and it go a really long way, and it makes me that much just like your client that has a 16 unit deal. We're the exact same way. Much of what we're taking on is a lot of work up front, but once we find that formula to operate, we're the first ones to be less burdensome to the property manager.
Gotcha. Oh, I can appreciate that. I can. So, one thing we had discussed before we started was, talking about when you go into a new market and find a new property manager. So that's something that you've obviously done in 3 different states and 7 different cities. What do you think about, how do you get that relationship started and kind of where does that go from the investor side?
I'll say this it's often difficult for a first time investor or an inexperienced one. Now for us going into a newer market and being able to reference a portfolio of deals in other markets,
Hmm.
it's easier to just get attention and get a sincere response, I think, from a property manager on the other side. But especially at the time, I'm thinking 2014, I went into Panama City. I did a 70 unit deal there in Florida. Otherwise, I had experience with a couple small properties in Cincinnati, Ohio, but I had no experience in Florida whatsoever. And it was a challenge for me to get too far down the road with property managers, at least until I had like the deal under LOI. To
Hmm.
say that I was working on something, it was difficult. Um, but for me, I mean, how I started was I worked off of referrals from both brokers, and then also I was able to get owner introductions through that broker for, hey, who could you talk to that might be a fit for this property?
Hmm.
Uh, and that ended up with 3 conversations, 3 different property managers. I ultimately ended up going with the one that was headquartered in that city,
Hmm.
because I felt it was important to have that hub or that presence right there. And that group also happened to be the largest of the 3.
Okay.
So, I risked the maybe with my eyes wide open, acknowledged that they might not be the most efficient operator. But for me in a new market, I think that scale and knowing they might have other properties or other employees that they could shift in there if need be would be helpful.
Okay. No, that's great. That's great. Yeah, I know we deal with a lot of owners, investors that are coming to Kansas City and it's their first out-of-state investment or it's their first one in Kansas City. So,
Mhm.
focus on building that relationship with them, going through the interview process as getting interviewed by the investor. And trying to develop that relationship. And I think a huge part of it is referrals at that point, right? Is who else within the other investor network are they able to get referrals from to build that level of trust?
Yeah, exactly. I mean, when I was there, one thing that I think is useful to do as a owner or new market is to ask for other properties that property manager manages.
Mhm.
Probably not the first to say that, but doing drive-bys of those properties, just make sure it's well maintained
Mhm.
and looks like you would want your property to appear. I think also making sure it's a similar profile.
Yeah.
I'm probably not bringing in Graystar for my 40 unit Section 8 deal in, in Tulsa, Oklahoma or whatever.
Mhm.
So I think um, it, that's not to say Graystar isn't great and some people love, some people hate them, but whoever it might be, I think there's a profile that you probably excel at as a property manager. And often that's what I'm going to be attracted to as an owner.
Mhm. Okay, no, I can appreciate that. When you're evaluating these new PMs, how does scale come into play when you're looking at them? Do you want to be with a company that's a couple hundred? Do you want to be with a couple thousand, somewhere in between? Like, where do you guys look for scale? Or does that even come into into play, and it's more about their performance and their relationship?
I have to almost answer that it depends. I think I tend to think that larger is better, although it's definitely not true, especially when you're talking sub 100 units. I really think sub 100 units, it's what is your immediate scale? Like if I'm in a submarket of Charleston, South Carolina, what do you manage in that immediate neighborhood already
Mhm.
that I know it's going to be paired with it, and there's some ability to share maintenance, share leasing people, rather than me just being the deal up in this quadrant that you need to drive an hour to get to, and your leasing people do every day.
Mhm.
I think it's more than overall scale. It's presence in relation to me. Um, for larger property managers, I do think there is a benefit to scale. I mean, we work with one management company that has 50,000 units. That it's just it's enormous to the fact. I mean, they're enormous. They'd never take on anything sub 100 units. I think our deals are some of their smaller unit counts, but it is nice to know that we have an employee out, and they've been very efficient at swapping someone in there to
Mhm.
ensure we don't lose that. But on the smaller side, I think it's just referral. I think understanding their reporting requirements, how they're going to work with you, what those expectations are up front, and then what do they own in that immediate, call it 5 mile radius or
Mhm.
7 radius of your property.
Okay, so just general presence in the market or sub-market specific to where that property is going to be. Yeah, I can
Mhm.
appreciate that. Yeah, you don't want to be the complete outlier in their portfolio if they're not familiar with that asset class or in that sub-market. So I can appreciate that.
Right.
Okay, great. Well, Josh, I think you've really answered all of my questions related to property management and your experience. And my big takeaway is just building that trust through clear, proactive communication with the owners is the best way to do that. So that relationship can be healthy, whether it's the guy that owns one or two single family homes, or it's, somebody that's got 100+ unit complex. They all want that same, proactive communication.
Exactly.
Awesome. Awesome. Well, Josh, if somebody wanted to learn more about yourself or DXE, what's the best way that they can get a hold of you?
Sure. So we are, like you mentioned, we are a syndicator. We're an investment group. We're located here in New York. So for those that are local, we'd love to these days grab a socially distanced coffee. Otherwise, please don't hesitate to reach out, www.dxeproperties.com. Whether it's from an advice perspective for someone starting in this business or someone that may be interested in investing, we're happy to start that relationship. But overall, I'm happy to be here. Great to spend some time with you, Colin, and all the best.
Yeah, likewise, Josh. I enjoyed it, and best of luck in 2021.